Hey WWE fans, welcome back to another edition of Future Wealth. Today we're going to be analyzing WWE's income statement, balance sheet, and cash flow to see if it's actually worth considering purchasing to put into our portfolio. Stick with me. Alright, so I created this spreadsheet that I took from the values of Warren Buffett, obviously, and based it on how he analyzes an income statement. Goes over the balance sheet and the cash flow. Actually, what I put together here, it was something that was from one of his books. One of the great books that I love reading is Warren Buffett's And the Interpretation of Financial Statements. Alright, so this is where I'm getting the formulas for value of the income statement to see where we stand, where the company stands, and if it's a good investment or not. And I'll just go over what I put together here. So took all this data from Yahoo Finance, and it has, the trailing 12 months from 2019 to 2017. So that's a total of 3 years back. They count 2020 as the trailing 12 months. So we actually completed 2020. So we're up. So there's actually 4 years. Sorry. So we have 4 years here. The numbers that you see before you are all in the stock, all right, all in the Yahoo Finance, and I'm just gonna pull that up right now. We go to the financials and we look at the income statement. Every information that I'm populating in this spreadsheet is based off of here, between the income statement, the balance sheet, and obviously you guys can see that, and the cash flow. So just make sure you expand all, otherwise some of the rows, some of the drop downs do not show up and you would miss that line item if you were trying to look for it. So you just have to make sure you expand all. So here, I'm not going to go back and forth where I pulled the data from, but this is where I got it. All right, so I populated it here, trailing 12 months to 2019, 18, and 17. I took the revenue. So this and the gross profit is a static number. These are all static numbers, all right? So, but the gross margin, what I have here is red and green. So based on Warren Buffett's book, this particular book, well, not his book, it's by Mary Buffett and David Clark, is that anything above 40% is considered good. I put a conditional formatting of anything above 40% would be a green, and anything below that would be red. Those are numbers that you would have to take in consideration for this year. For the trailing 12 months so far has been really good, and I'll explain that in a little bit, why it's been so good. The net margin, everything unfortunately is below 20%. This is the average of each column. You can take the average of the last 4 years, or with the trailing 12 months included. You could take that in consideration. But if we took it into the consideration, we're looking at 38.63, which is below the 40% mark that we're talking about. And then the 9.10 obviously is more than half of what we would consider decent or good. So in the balance sheet, we have the retained earnings plus the net income. Well, not adding the income. Where the math that we're doing here is that between the net income and the total equity. And that's just really dividing to see what percentage we are at the equity. And we have here at 33.8%. And then the note that I left myself is anything above 20% is efficient. WWE's balance sheet seems to be doing okay. I don't know what happened 2017, but if you wanted to take the average of all the 4 years from 2020 to 2017, it's at 26.57, which is still pretty good. So the next one is the cash flow. And what I did here as well, what we're taking the formula for is B22, which is capital expenditures divided by net income to get, let's see what percentage we're at. And here I left a note saying less the better. This was 20.99. So anything I put as less than 20% considered good. Anything above that obviously is not. So I'm not sure why 89, you can see these numbers here based on 2019 and 18 and 17. We have a huge spike in 2019 at 89.65%. I'm not sure what triggered that. It could have been anything, but just basing on numbers. I'm just strictly basing it on numbers right now on the income statement. The dividend payback that they did for the following years has been pretty consistent, more or less. You can see here 37. They're all in 37, 36. So I'm assuming like each year went up. I don't know why, again, 2019 just seems a little off from everything else. Between 2018 and 2020, they look pretty identical, but then you get this discrepancy in 2019. I'm not sure what happened in 2019. I don't know. So that's based on the balance sheet. But if I put this formula, the same formula that I would put into, that I would do it for every stock, is the intrinsic value, where the PE is 7, and we have these static numbers for the blue column, the blue cells. And then of course I took today's most recent AAA bond yield with current EPS of WWE, which is, let's just make sure that we're on the same page still, 1.56. And I enter that. I didn't put the years, but WWE's, I didn't look up its dividend payback and how frequent that's been. That's one thing I forgot to do, but will leave that for now. But based on the formula that I usually do for the intrinsic value, the current price of $55 is a buy because it's coming out to 76.37. Now, and I could explain why that number is a buy right now. The upside of 38.85%, which is awesome, and of course the dividend yield. Now, the projected 26.6 growth rate has been very, very optimistic because, and I want to point this out here, is that the previous 5 years has been at 23.54. They're projecting next year to be 32.3, which is pretty high. Now, we can look at the chart and see that within the last year to date, this has fluctuated pretty drastic. But if you look at it in the last 5 years, or even in the entirety, look at this trend. It started even way back in 2000 or 99. It has been very stable. You see, the numbers are just running 12, 13, 16. Like, there was not one year that it exceeded expectations or it, went tremendously up or down. Had a little spike in 2014, and then it just gradually went up. And then all of a sudden in 2018, it went up really high, 19. Then it started coming back down in the 2000. And then, of course, in our 2000 of March, I believe, let's see right here, March. This is the dip, the lowest of the low for everything across the industry at that time. I know that I watched maybe like a few episodes where they didn't have any live audiences, opened up virtually when they announced that they were going to do shows virtually and just have the wrestlers wrestle, but no one can actually attend to the actual events. That probably boosted back up the stock slightly, and of course now we're at the 55 mark, but it is a buy. But you can see this whole thing between 2018 and 2000 has been a huge spike in comparison to where it has started and where it led up to that. I'm not sure, I don't follow WWE in that fashion where I'm constantly watching what they do or what they advertise or the WrestleManias. I think the last WrestleMania that I watched was probably back in like when Hulk Hogan and Andre the Giant. So I'm like way back there in the 80s with the whole WrestleMania. They're categorizing this as an overvalued stock, but it is a long-term stock because it pays a decent, I wouldn't say a very attractive dividend, but that all comes down to what you would consider attractive based on the numbers here. So I wanted to go back to what we saw here on 2020 and the huge spike in this realm of time for WWE comparison to all the years before it. And it shows here, it reflects all that, because if you look at 2019 and the trailing 12 months, which it leads obviously from 2020 up until now, look at this like growth of 44.22%. I highly think that what this increase was when things were shut down and things started coming back, people got excited. And when people get excited, they started doing more, paying more attention to WWE and anything within the company itself, the events and all the other good stuff. Now, in regards to the spreadsheet, the income statement, and the intrinsic value of it, what is WWE's moat? Well, the moat is, I think that there is no direct competitor. I mean, besides maybe like UFC, boxing, but those are not publicly traded, I don't believe. WWE it's one of a kind. It's a trademark. It's been around for like as long as I can remember, as long as I've been a child till now. WWE has always been established company. I mean, I remember WCW, and they had all the other, and when they were, originally when they were WWF, and then they had this whole issue with the World Wildlife Federation instead of the Wrestling Federation, and that's when they changed it to WWE. That was some time back. This is what I have so far in regards to the company itself. Based on the intrinsic value, it is a buy, but looking at its cash flow, it's not all there, only because I'm not sure what happened in 2019 that had this huge spike, because if we recall, the pandemic didn't really happen till 2020. So I'm not sure what happened in 2019. I mean, I could easily say that in 2019, possibly things started shutting down that early. I highly doubt that. I don't think it did. So I can't say like, they were paying income to staff but not holding events. So this doesn't make any sense unless they just had a huge expense in this year that they did. See, again, so if you use these formulas to dictate if you were buying this stock or not, there's a lot of details missing. And the details would be, how much of the profits did they take to enhance the business? What portion of the money did they use to do the marketing or advertisement, just promoting it? I don't know that. But what I can see based on the current numbers and throughout the years is that this is what was spent, or this is what is left, or it's really hard to determine those other factors. Maybe they're basing it on a cash on return on an investment that they put in 2019, and it'll take time for them to reaccrue that return each year, maybe at like 5% or 6% or 10%. I don't know that. But what I'm saying is, what I'm looking at based on the numbers, even though my intrinsic value says it's a buy, there are other factors. And when I say other factors, you see the gross margin and the net margin. So these numbers are slightly low because they have gross profit and revenue. So there's other factors that you may want to consider if you were to look into it. Now, based on my thing, I honestly think because their return on equity and because of their cash flow, I don't know. It's very hard to determine because things are opening back up and the industry is kind of populating again, and people are maybe attending these events in person, which would be awesome, because then these things would just, like, people are just been so isolated within the last year that the first year of comeback in 2021, if WWE has this Battle Royal or whatever events they have, SmackDown, whichever it is, it may just be sold out, packed, and it'll just drive the price of the stock insanely off the chart, and hopefully it can maintain that momentum of, we missed out on so many things that we're not going to take things for granted, and each year or whenever they hold an event, people are just going to go, I don't want to miss out, like the fear of missing out. You may have to take those into consideration. Based on numbers, it's fair, it's decent, it's not horrible, but it's not the best, okay? But based on an intrinsic value, because of its projected 26.6% 5-year growth, which is very, very attractive, not many companies have it that good. You can see that here again. I'll show it here. In the previous 5-year was 23.54. So there is some historic relations to how those numbers are coming about. And of course, who hasn't heard of WWE and every franchise character that's come out of there? John Cena and The Rock. There's just so many. They started there and they become in the movie industry and keeps on bankrolling. It just keeps on rolling from there. Like WWE pushes out a new movie star. Every once in a while they push out a new movie star, or just WWE's presence alone with their characters and the roles that these wrestlers play has always been very entertaining. A little slightly different from UFC and those MMA fighters, where they're a lot more aggressive in fighting style because it seems to be more realistic, obviously. But WWE has always had that entertainment factor really high up there, and then you have to take those into consideration, because I look at WWE as a Disney of sports wrestling. Sort of like, it's just entertaining to watch. It's like a movie. They have drama, they have suspense, they have all those interesting details to the story, to the WWE franchise. So my opinion is, and I would honestly would probably purchase some WWE, putting it into my dividend portfolio, but I would not go too crazy with it. I would not expect crazy returns. I would probably be more excited about the fact that they're paying a dividend opposed to the growth of the stock price itself. All right, so I'm going to leave it to there. That's pretty much what I have to say about this. So this is my analyzing WWE. Hope you guys enjoy this. Please stay with me. Subscribe, comment, like if you haven't done so already. And thank you again for being here. Bye.